shock to me, but I would be surprised if we even get 5 people today, which is no big deal because I don't push too much on social as much as. Oh, and by the way, too, the other thing we're going to do, finally started doing after 5+ years of not doing it, is start clipping the episodes. So I have a guy who goes through, finds these short form video moments, captions them, makes them look pretty. And then we publish those out everywhere, including like Instagram, Facebook, TikTok, LinkedIn, Twitter, blah, 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 YouTube. And we'll be tagging you in all of that stuff. And those will probably drop around the same time as your episode because, well, it'll have to be at the same time as your episode. So just be on the lookout for those. If you get notifications from all your social platforms, you are going to get a lot of them. So we'll probably have, and this one might even be more clippable than most. So we might even have 5 to 10 clips. So hopefully that'll be a good way to drive some people towards you. All right, let's do it. Everything looks good. Hey, we have a few people watching us live. Hello to those people. All right, let's see. Probably my mom and my sister and my dad. No, they don't watch. I don't even watch. All right, let's see. Where are Quinn? There you are. Okay, here we go. Okay, today on the show, we have money management coach Quinn Driscoll with Value Gal. Also, you can learn more about her at thevaluegal.com. But let me tell you more about Quinn. Quinn Driscoll is a CPA and ABV. She's a money management coach for real estate agents and brokers. As the founder of Value Gal, she teaches successful business owners how to follow a money management system so that they can stop feeling confused, anxious, or worse, broke. Prior to working with Value Gal or creating Value Gal, Quinn spent more than a decade as a sought-after financial expert witness who worked in the high-stakes world of litigation consulting. She is a frequent speaker and guest expert on financial topics, including building a valuable business, money mindset, and goal setting for business owners. She is a superstar in the financial services world, and we are so excited to have her on the show. Please follow her again. Go to her website, thevaluegal.com, and also find her on Instagram at ValueGalQuinn, Quinn, Value Gal Quinn. Quinn, welcome to the show.
Thank you so much. So happy to be here.
I am just happy to talk to somebody with a lovely Minnesota accent. So you are from the Twin Cities, and it's a very mild, but it's a lovely accent. I've always been a fan of that, the little affect that people in that area have. Are you originally from the area?
I am originally from North Dakota, so you can
that's what I'm hearing. Okay.
Even hear it more with the long O's. Yes.
Oh, sure. It's one of the now I'm going to sound like I'm bragging. I'm not bragging because I had a job that took me all over the country. Wasn't like I planned out. But North Dakota is one of the 6 states I haven't yet been to. So one of these days I'll make it over there. But Minneapolis and the Twin Cities is awesome. And you guys, one of the great bands, actually they're a New York band, but they sing a lot about about Minneapolis, is the Hold Steady. So anyone out there who wants to find a good rock and roll band, the Hold Steady, they've been around forever. They sing a lot about Minneapolis. And Husker Du, I think, is also from me. Anyway, it doesn't matter. All right, let's get to the main thing here. I could talk about music all day and bore our audience, but I don't want them to leave. So I want to, my background, I actually was a financial advisor, not a CPA, and certainly not not having the credentials that you had, and this was a million years ago in a former life. But I find that we have here at our company, we've got almost 800 agents, and not only that, but I work with a lot of other agents at other firms because I volunteer with our local realtor association, and so I hear a lot about money management, and it seems to be one of the big challenges of realtors because, of course, those commissions kind of roll in when they roll in, and sometimes we need to sort of smooth out that roller coaster ride. So this is the first time in almost 500 episodes, I think, that we've ever had a financial services person on. So I am super excited about any tips and tricks that you can help our audience to better, again, smooth out those bumps in the commission payout world. But before we get to that, how'd you get into dealing with money and being a financial services person?
Yeah. So my story, the story of many realtors, is of an accidental entrepreneur. So I always pictured myself safe and snug in a little cubicle. Never thought from in a million years that I would be a corporate dropout with my own business. But I worked for 10 years in a very deadline driven, high stress and perfection demanding job. So I did get the opportunity in that job to work with hundreds of small businesses and see behind the scenes of their financials. So that was such, an interesting and weird and great experience. I was a CPA, worked, as you mentioned earlier, as a business valuation advisor in the litigation space. So working as an expert witness, keep putting one foot in front of the other. And one day it was like, you look around and it was like, this is not another 30 years for me. So I realized that I had so much small business knowledge and experience that I wasn't able to share in a way that I really enjoyed. I live, like we mentioned, in the Twin Cities, which is very much a big corporate town, a lot of big employers here, and literally didn't know anyone who was a CPA, mother of 2 small children, who was running basically an online business. So it was a super scary leap to decide to go out on my own and very unnatural to be taking a risk. So CPAs not known for our big dreams and like just going for it. So, but you know what? I had to do it. So I just had to, figure out a way that I could help the smallest small businesses that really don't get a lot of attention from, they're priced out by CPA firms and they just don't have the attention of kind of the financial professionals world. But I also, I knew that I could not have started my business if I had spent every dollar that I made along the way. So the money management piece of it is just so, close to my heart from, my professional background standpoint, but also personally just knowing like it is really scary to own your own business. And to the extent that I can help real estate agents and brokers get a handle on those money management issues, it is just such a good match for what I want to do.
Here's how I know that the money management piece of being a realtor is difficult. I and my boss, my business partner, created a commission advance business simply to give people their commissions ahead of closing. And the only reason we need to the only reason this business even exists is because of the challenges that realtors face. And not that we're doing anything wrong. We love our commission advance business. We're grateful to be able to provide that service. But basically, we're charging people 10% to give them a loan on their money, which is going to close, in 20 days or whatever it is. And that's just how commission advance businesses work. But that wouldn't be necessary if people maybe had some better spending habits or saving habits. And the challenge, of course, as a realtor is one of the least sort of impressed upon skills when somebody becomes a successful or even just a new realtor. They're just trying to survive. They're trying to, eat what they kill. They're trying to pay their bills, save for taxes. And again, you were saying the smallest business is a realtor is about as small a business if you're an individual practitioner as possible. So what are some of the first things that anyone who is listening, who is a realtor, who's not on a salary, which is, unless you work at a company maybe like Redfin or some of those have salaried realtors, but everyone else is on their own. What are some suggestions that our audience can start taking advantage of to better, handle their money?
Yes. So one thing that I have noticed with real estate agents is that the people who are successful on the sales side are way ahead of anybody else because you have learned how to follow a system. So you know that if a system works, if your lead gen system works, that you are going to get sales. So it's the same concept for the expenses side. It's if you know what steps you should be taking, you know that you can implement those, right? So you're a hard worker, you're a go-getter, you know that if you have the steps and you have, the support and you know what to do, you can get it done. So the really interesting thing I think that just needs to be talked about a little bit is that with real estate agents, you have no problem talking about, here is my sales volume for the year. Here is my gross commission income for the year. Everybody's sharing that with each other. It's competitive. It's kind of fun to see who can be a top producer. But then it's like the conversation just stops there. And not only does nobody talk about what it costs to run that business, but nobody talks about the fact that you have to spend a lot of money to make a lot of money. So kind of just having that in your mind and being aware of the fact that, there is a way to get a handle on your expenses. And just because nobody's talking about it doesn't mean that it's not really important. So the very first step is once you have those commissions coming in, no matter how kind of rudimentary the system is, you have got to start tracking your expenses too.
And what do you recommend as far as a tool to do that? There are obviously a million different tools. Do you have one that you prefer, or is it whatever system you use is fine? Just pick one. I'm curious to get your thoughts for tracking expenses.
Yes. So for tracking expenses, I always recommend, number one, having at least one business bank account and at least, and only one, I should say, business credit card. So job one, separate your business and your personal finances and have that dedicated business account and dedicated business credit card. At this, point in 2023, pretty much any bank, any credit card is going to have online tools for you. So whether it is allocation enabling, where you can, go through your credit card statement and say, here's the category for all these things. That's a great thing to do if that's how you like to do it. Just even downloading at the end of the month to Excel the transaction data and going through and doing that yourself is a great way to do it too. It doesn't need to be fancy. It doesn't need to be complicated. It's just starting with anything is really the best way to do it when it comes to tracking your expenses.
And expenses, let's back up even prior to that, because yes, we do want to track expenses. You need a system and you want separate accounts. So separate bank account, separate credit card, and you're going to make those purchases, but not everybody even understands. Well, I'm going to get off of expenses just for a moment because I realized I had a really important question. And this, I'm curious if you can speak to this. When should someone decide to either become an S corporation or continue on, or maybe an LLC, or continue on as an independent contractor? So when we become realtors, we join a brokerage. Almost certainly, we're an independent contractor by default, and we're going to get 1099s at the end of the year based on all the commission we've earned. At what point does it make sense to possibly create your own corporation and then be an employee of your own corporation? For example, I have an S corporation. I'm not a practicing realtor, but I'm kind of paid the same way. So imagine that I'm basically a realtor. So I have an S corporation. I am the sole employee of my company. Can you speak to why agents may want to consider that as an option as well?
Yeah, so I can speak to that a little bit. The first thing I would say is that you should have an LLC right at the beginning. Definitely make sure that you have that state filing status is usually LLC, and then a federal employer identification number are kind of the two things. You'll need those to open your business bank account. To show that you are actually a business. So definitely start with an LLC right away. And that is that's to start getting that separation from your business and your personal and start, running your business as its own entity. And then from there, You can still have an LLC that's taxed as an LLC versus an S corporation. So the time to switch to an S corporation is going to depend on your
Salary,
situation.
or depend on
Yeah.
the amount of income you're generating for the business.
Yeah. So I don't have a, hard and fast number. I would say that is something that you would want to talk to your tax advisor about,
Mhm.
and definitely have a tax advisor.
Yes. I remember when I set up the S corp, it was suggested to me when I got to around, and this is a long time ago, but I think it was around maybe $80,000 in salary, or in commission, or whatever income. Maybe it was 100,000, somewhere in that neighborhood, is when it started to make sense to explore S corporation versus another system. So again, please get yourself a tax accountant, somebody that can actually answer these questions, because we're talking about massive tax savings. And for those of you that aren't familiar with S corporation, one of the cool things is, if it's your company and you're an employee of it, you actually technically have access to the entire assets under the company. Now you'll pay yourself a salary, and you can pay yourself what I think the IRS says is a fair and reasonable salary, which you can get calculated through your tax advisor. But I am telling you, this is probably the biggest missed opportunity that many successful realtors have not explored, is creating some sort of, whether it's S corporation or LLC, whatever, and understanding why you want to be an employee of your own company, and when not, and why there's it's kind of like when you buy a home and all of a sudden you realize, oh my gosh, the tax benefits from the mortgage interest are really great, and you didn't really understand that before. This is the same sort of deal. You can reduce your tax liability for personal income when you have an S corporation to very, very low. So anyway, we can move off of that, but please, everybody, get yourself a CPA. And if you don't have one, reach out to Quinn. She is the best. So let's jump forward to commissions, because this is what our audience cares about. This is how they get paid. This is how they eat lunch. So a commission comes in. Now what? How do we start? Like, how much of that should I put aside for taxes? How should I do that? What are some strategies just to make it as automated as possible so I don't spend it all?
Yes. So the first thing that you want to think about is, your commission checks are not the same as your paychecks. So start with that mindset of, exactly like you're saying, as soon as it comes in, if you have, if it's already spent, or if you're thinking, okay, I know exactly where this whole thing is going, you need to stop right there, because that's what's going to keep you on that roller coaster. So you really want to start with a system, a percentage-based system, to allocate each and every one of those commission checks that's coming in. So it depends on the size of your business revenue-wise, but for the smallest businesses, if you're under 250,000 in revenue, what I suggest starting with is about 15% for tax savings, and target 30% for your business expenses, and 50% to pay yourself. So if you think through that, every commission check that comes in, 50% is what's available to you to pay yourself. That is a good place to start.
I think the mindset is so important. It's a little bit of a depressing mindset, as I see a commission and I divide it in half and go, okay, that's really what I get to spend. So I understand the inclination to look at the entirety of it, but I think when you have these kind of systems in place and you just automatically, like you were saying, allocate to retirement, to taxes, you then start to look at your commissions differently. And you're right, it's not a paycheck. It's a sum of money, some of which you can use as a paycheck.
Right. And that mindset is really important to set you up, like we said, to be off the roller coaster. So let's say that you've decided you are going to, you want $5,000 a month to go to you for your living expenses, just as an example. So that means if you have a $10,000 month, great, 5,000 going to you. Perfect. If you have a $20,000 month, then 5,000 is going to you, and 5,000 gets to kind of, hang around until you actually need it, maybe the next month when you don't get 20,000. So it's the mindset of what is available to me for my personal paychecks is different from what I'm actually going to take out every single time. So I should say there's a kind of a distinction there of the paycheck or the commission check is deposited, 50% is available to you. But that doesn't necessarily mean that's going to be the amount that you take out. You're going to have a regular amount that is consistent coming to you.
I want to go back to expenses for just a moment, and I will want to tell you about something that really transformed my life I'm a creative person mostly, which means I'm not particularly strong at the financial side of business. I'm good at creating ideas and, being goofy and that, doing podcasts and things like that. But what I'm not good at is managing money. So what I did is I never in my life had actually had a budget. And it sounds so simple for people that have budgets. Like, how can you run a business without a budget? Well, I didn't. And how do you run your personal life without a budget? Well, I never did. So 3 years ago, I started using You Need a Budget, which is an app online. It's a web app. It's like maybe it's like $100 a year or something like that. I am telling you, I was able with 3 minutes a day. Now I spend not even 3 minutes, maybe 2 minutes a day. I'm able to reconcile all of my expenses. I'm able to see where I'm spending my money. All of my accounts get pulled into one location, one website. Everything gets dropped there. And I can literally account for almost every single dollar that comes in or goes out. It sounds like a lot of work. Once you get the hang of it, even for somebody like me who's not numbers minded at all, it's actually really, really easy to figure out. And it helps you really track the ins and outs. So I'm curious if you have any thoughts on budgeting.
Yes. So I am curious about what made you kind of take the leap to become a budget person, because a lot of people, they just have a negative connotation of budget, like it's depriving.
Well, me too.
You know what I mean? So if you are willing to share.
Well, I knew that I was. So here was my the impetus for me doing it. I suspect a lot of our listeners can relate to this. I was like, I bet I'm spending too much money in certain areas of my life that aren't necessarily obvious. Like, yeah, okay, if we go to Starbucks every day and we spend $10 or whatever, then you that's pretty obvious. But there are like little things like subscription fees that I wasn't realizing how many of those I have. How much am I spending on restaurants and dining out and entertainment? How much am I actually like? I just wanted to know what percentage of my expenditures are for the things that I think are healthy and reasonable. And when everything is 2 taps away on your phone and you're not physically handing over cash and receiving cash back, everything's digital, it's invisible, it doesn't feel like anything. And I knew that it's so much easier to, get Amazon boxes delivered every day and not think about the total amount I'm actually spending, right? So it was, for me, it was because it's so easy to buy things. I wanted to make it just have like a little checks and balances, because I know I'm not going to stop buying things, but I wanted to know, how do I at least keep it in the front of my mind of how much am I actually spending?
Yes. So one thing that I find really helps a lot of business owners on both the business and personal side is, before you start thinking about making a budget, and that seems like scary and a lot of work, is to look back at what you have actually spent as a starting point. So
Yeah.
a lot of times I will get into, working with a client, and we'll pull up their QuickBooks financials, and I'll be like, okay, so we have general business expenses here, $30,000 last year. Like, let's talk about what that is. And I give everybody a mini heart attack with this question, because they're like, $30,000, like, I don't know. But then when we get into it, it's like, oh yeah, okay, that was this, and that was, these things, I guess that does add up to 30,000. So that makes sense. So it's the kind of the process of the information gathering and the getting through the shock of what the actual numbers are, and then realizing like, okay, yeah, it actually, this does make sense and this is necessary. And so now I can feel good about that number in my budget because I know that it's real and I've done it before, it's doable. Or the other way around, like, ooh, I can't believe I spent that much money and didn't get anything out of it. So I'm, then it's easy to be like, no, I'm not going to do that anymore. So yeah, it's really, once you start kind of getting the information and getting past the, I don't want to look at it, like I don't want to log on to my bank account, or I don't want to log on to my QuickBooks because I'm worried about what I'm going to find.
Yeah.
That's the hardest part, I think.
It is the hardest part, and it is uncomfortable, but that discomfort quickly changes to comfort, because what it does is it creates this feeling of responsibility and power. So initially, yes, I totally am with you that it's scary. It's sort of like, oh my God, I don't want to, like, it's like looking at yourself naked in the mirror and seeing all the imperfections. You're like, I don't really want to do that. But once you start going, okay, now I'm going to start targeting these areas of my expenses. There are so many realtors who work incredibly hard and build up amazing businesses, treat their clients well, really go above and beyond. And then because of their inefficient ways or ineffective ways of managing their money, are broke. And this is, or even worse, I'll hear somebody at an event, a realtor event, say, I need to put a new addition on my house, meaning I need to go sell it. And they'll say, I need to sell another home to do that. And I'm again, I understand that. I mean, we can think like that. That's fine. But instead of thinking transactionally, let's come up with a process to where you can have more regular income prediction, right? So that you're a more predictable stream, so that you're not worried about, okay, I got to come up with another 10 grand to pay my taxes this quarter, right? And which happens. So the good news for all of you out there listening who are like, I'm not good at managing money, you can hire people to help you do this. They're ridiculously uh, inexpensive in my experience. They're super helpful, and they will protect you from going broke. If nothing else, you should have a fear of going broke. I don't mean you should be terrified, but you should have a healthy fear of losing all of your money, because the reality of it is realtors have to do everything. They have to wear every single hat that a business owner has to wear. And the skill sets that make you a great realtor might not be the same skill sets to be a great financial planner. So, which is why, people like Quinn are so important to our industry. Quinn, what are some of the mistakes that you've seen realtors make with respect to poor sort of money management?
Yeah, so I think the first thing and the number one thing is spending the commission check before it even hits the bank. You know what you're going to spend it on. And so really starting out right away with that allocation system. And I like how you use the word target, because that is a great way to think about it. Like, hey, you might not be hitting your targets for expenses or, anything in your business, but that's okay. It's just a checkpoint, right? I'm
Yeah.
going to check in with this and figure out, am I on target and am I not on target, and what do I need to do to fix that? So I think just having kind of a regular check-in on what is happening with your money is huge. So many clients who I work with are kind of blown away when we start working with a commission pipeline. So that's kind of a fancy way to say, what deals are closing in the next 2 months and how much are you expecting to get from that? Let's put it on a literal calendar so you can see when money is coming into your business. And just doing that and updating it on a weekly basis is like, it's so helpful to give you that clarity of like, oh, if this is my revenue goal for this quarter and I have this much coming in, I'm going to hit that goal. Or like, no, I'm not. And I don't have anything else cooking. So this is probably not the best time to be blowing up with a huge client event or something like that, So
Yep.
it's having the check-ins on a weekly basis, I recommend, with your commissions and your expenses, to just start having that flow of information where you know where you stand.
Yeah, it's the idea of like, it's like stepping on a scale. None of us want to do it, but if we make a habit of it, we can start to notice trends, right? We don't need to know every moment of the day what our financial bottom line is, but we need to know where it's headed, right? So we need to know, are we heading in the right direction? Are we on top of it? Are we aware? Are we paying our bills? Just working to sort of outpace expenses, is this sort of cycle that realtors get into, right? It's like, I've got expenses, sell a home, got, and it kind of cycles through, and it can be very stressful. And what we're really talking about is minimizing anxiety. What we really want to do is, your job is hard enough as a realtor. It's already anxiety ridden and difficult, and let's make the financial part of it the end goal, the actual when you're celebrating in the end zone with a touchdown. Let's make that the easiest part of the transaction, meaning, let's not worry about overspending. You work so hard for this. Let's set up systems to automatically delineate those assets as they come in to separate accounts. Let's save some for retirement. Let's save some for taxes. Let's put some back into the business. Let's pay our bills, but also let's evaluate our expenditures. Quinn says weekly. I would even say, look at your expenses daily, which, by the way, you can get down to about 1 minute if you use, like mint.com, or You Need a Budget is the one I use. But a lot of these web apps are so helpful because they can literally pull all the data from the various accounts, put it in one dashboard for you, and you can just kind of do a check-in. And by the way, I found it sounds so silly to say this, but like, I found somebody charged me $300 for something that I didn't recognize last month, and I was like, oh, and I got the money back because it was actually a mistake. So if I wasn't paying attention to that, I would have just paid it.
Right. And let me tell you from personal experience, if you have children who are on the iPad, who are buying sneaky apps, you got to get a handle on that before it gets out of hand and they've bought like all the, Roblox characters or whatever it is. So check the statements.
Hilarious. Yeah. Kids and the microtransactions. We need to evaluate this. Again, guys, what we're trying to help you do is really take the hardest part of the business, the financial management part, the business part of it out, so that you can be focus on what you do best, which is getting in front of clients, helping clients buy and sell homes. So Quinn is this is what she does. So talk about, how do you help realtors better sort of plan for the future?
Yeah, so I teach a 5-part system. The acronym is CLEAR. So CLEAR: commissions, lifestyle, expenses, allocation, and return. Those are the 5 areas that we are looking at to figure out, is everything, at the level that it needs to be so that things are working together. So the C, commissions piece, that's obviously the money coming into your business. If you have a successful real estate agency, you have your lead gen, you have your sales, you have your money coming into the business. That's great, because the other pieces are the parts that you can honestly control yourself. The commissions piece is the piece that's most out of your control. So once you got that piece down, then the rest of it is actually a lot easier to deal with. So the L is for lifestyle. So we talk about, how are you spending your time, your money, and your energy in your life, not just in your business, but with your family, with your health, with your community involvement, all of those types of things, to understand, are you doing the things that you want to be doing, and how is your money helping you with that? The next piece is expenses, as we've talked about. So looking at what you are spending your money on, both in your business, and we can look at your personal too, if that is something that's helpful to you. But to get into those details and I am there to, not shame you or tell you that you're doing everything wrong. I think a lot of people get worried about that, like, oh, it's so bad, I just don't even want anybody to know. But you know what, I've seen it all. Don't worry about it. We're going to get in there and we're going to look at what you're spending your money on, and are those things that make sense? Are those things that you need to be running your business the best way you can? Allocations, we have already talked about a little bit. Having those targeted percentages is really helpful, so that every dollar that comes in, you have a mental map of where everything is going, and that you're always going to have what you need available in your savings. And then return. So looking at the ways you're spending your time and money, and what is the return that you're getting on those. So if you are running the same ads that you ran 3 years ago that did great for you, and you haven't looked at it lately, like, am I actually getting any leads from these ads? Maybe that's a place where, hey, that's a big chunk of budget that can go into a different type of ads, or just, into a different type of lead gen strategy. So really looking holistically at what are all the things that are happening, and what are the tactical steps that you need to take that I am happy to help you with. Like, is it, we need to be on a Zoom call and we're going to walk through logging into the bank account, and we're going to cancel all the subscriptions that we don't use anymore. So I am there to be accountability, coaching, advice, sounding board. You can vent, like, all of the things. It could be a little bit of a therapy session, because money is a tough area for a lot of people.
Money is really associated with lots of shame too, and that's the big thing I want everyone to. It's the idea of getting naked and stepping on a scale. It's not an easy thing for everybody to do, and it's hard enough to do. Using that same metaphor, by yourself in your own bathroom alone, but then to say, here's me, to the entire to someone else like yourself, and say, here's all of my financial nakedness. It can be a little tough, and people feel certain ways about their past spending activity. But guys, what I will tell you is, get over that. People, when you hire a CPA to help you with this, they don't care. They just want to help you. And so even if you have negative equity, or if you have credit card debt, or whatever the situation may be, that you're like, I wish I didn't, or I wish I was in a different position, get past that, because what we really need to do is we want you to be able to pay your bills and plan for the future and build a successful business. So many realtors leave the industry not because they don't have enough business, because they don't manage their finances. It's like the silent killer that nobody talks about in this industry, because we're all talking about deals, get more and more and more deals. And there isn't any sort of, like, if you go to the NFL and you're a football player and you can focus exclusively on the, playing on the field and lifting weights and, doing all of this, the skill building that you need to do to be a good professional athlete. They have people in the background making sure that when you retire, you have a pension coming in. Well, that doesn't really exist for real estate. So you have to take control of that. Unfortunately, that we haven't figured out a way to automate that for people. So Quinn and people like Quinn are available to help you figure that out, because there's nothing worse than working for 30 years to realize, oh, I didn't save as much as I could have. Or even better, I didn't take advantage of as much of the deductions that I could have, right? My dad did his own taxes. He was a CPA, but that wasn't his profession. But he did it for like 15 years, a long time ago. And then finally, he started going to a CPA. And turns out that he had been doing it wrong the whole time. And the CPA was like, I cannot believe you are not. And my dad was unintentional, but he was like, can't believe you're not in jail. Not because, I mean, actually, my dad overpaid his taxes, funny enough, for like 15 years. And so the IRS had to give us a big check. Basically, don't try to do everything yourself. Get a professional. Go to thevaluegal.com to learn all things Quinn Driscoll. She is going to help you manage your finances. Guys, just hire somebody for this. Don't try to do it yourself. It's too much. You have too many other things on your plate at once as a realtor. Don't put this on your plate. Hire somebody. Trust me. My CPA, shout out to Debbie, the crazy tax lady. That's her moniker, which is hilarious. And she is not crazy, but that's what she calls herself. And Debbie is my savior. She tells me every year, like, for example, Quinn, I'll talk about this. Going back to the beginning about like starting an S corporation. One day, Debbie called me and said, "Hey, do you have monthly meetings for your board of directors?" Which, by the way, I'm the only person on the board of directors for my silly little company. Yes. She says, "Well, you can expense those, and I can have 2 parties a year, I think, as well, like a holiday party." So there's all these cool little ways where you can take advantage in an ethical way of the IRS tax codes by maximizing your deductions and your expenses. But you need to go to a professional for this. Tax, just doing it online, maybe it would give you some of that, but going to a highly respected and competent CPA and money manager will be able to help you figure that out. And also, we need to save for retirement too.
Yeah, we sure do.
It was a lot. I was saying a lot there, and I apologize for that. But I was just trying to say money it's the thing we don't talk about, and in this industry. Quinn, what are the first steps? So we talked about the first steps being when commission. First of all, establish yourself as an LLC. We talked about that, and talk to a CPA about why that makes sense. We talked about creating an allocation strategy. When commissions come in, they're automatically distributed to channels that we don't touch: retirement, taxes, etc., expenditures. And then we also talked about return on investment, right? Like, how do we actually evaluate our business expenses that are generating income for us? And somebody like you can come along and take a look at all of our books and say, okay, this is working for you and this isn't. Where do you see realtors struggling the most when they hire somebody like you?
That is a great question. So I think the struggle is at the very beginning of just getting over I haven't done everything right, and I know I haven't. And so I just feel like I'm going to be judged, or I feel like, a lot of people honestly will be like, I don't want to feel like I'm getting in trouble in math class again because I'm not good with numbers, So it's really those kind of deep-seated emotional
shame.
Shame. It is the shame. So that's tricky, but it's kind of like once you make the commitment, I think making the commitment is the hardest thing. That you're gonna jump in, you're gonna do it. It's gonna be not perfect at the beginning. It's gonna take. You're going to try stuff and it's not going to work. And then you're going to try something else and you're going to forget the other thing you were supposed to do. And that's okay. It's all part of the process. So, just being okay with that as much as you can when you are like an overachiever, like a lot of the top producers and high performing agents are. It's hard to let those kind of vulnerabilities show a little bit. So I think that's honestly the hardest piece.
I've had so many top producers on our show talk about my gross commission income was $500,000 or $1 million, and I had no savings. Like, people would say, yes, on paper, it looks like I am incredibly successful because of all of these transactions, and yet I really have nothing to show for it in the bank. And that's where this guilt or shame comes in of like, I don't really want people to peel back the curtain and see. But the only way out of that, it's funny, I'm pretty confident in saying the only way to expel shame is by bringing it into the light, meaning expose yourself to somebody who can help guide you through. So even if you feel crummy about your current financial oh, and by the way, little pro tip for everyone: our little truth bomb. Everybody feels crappy about their financial situation all the time. Nobody feels like I've got enough money. I mean, maybe 0.1% of the population maybe feels that way. For the rest of us, everybody wants more money. Everybody wants to save more, spend less. We all feel like I should do better, right? So it's totally normal to feel like I should be spending less and saving more and I should be earning more, right? Like that's totally normal. So don't worry, find somebody like Quinn. So Quinn, the best way that our audience can work with you, and by the way, pick a CPA that has experience dealing with realtors because they understand. Quinn, for example, understands the realtor money sort of circle. She understands that process. Pick somebody who gets working with small independent businesses like yourself, like realtors. But please, for everything to learn about Quinn and what she offers, go to thevaluegal.com. Also, want you to follow her on Instagram at valuegal. Quinn will have links to the Instagram and her website in the show notes. Quinn, any last tips or advice for our audience?
Yes. So I think as you just alluded to, everybody thinks that they are the actual worst with money and that everyone else has it all figured out. That is not correct. Nobody has it figured out. Everybody's just doing their best. So, just do your best. And if you do need help with it, find somebody to help you. And my other thing I would say is that, cut us CPAs and accounting brains a little bit of slack. We're not trying to be confusing or just giving you the profit and loss statement and talking our weird language that doesn't make any sense to you. That's just what we know. So ask the questions, ask so many questions. We really want you to feel good about where you are with your money. So if you don't understand something, just ask your financial person to explain it again, a different way. Just keep asking until you get it because they are here to help you.
Thevaluegal.com is where you can go. We have a thing that we're going to be sending, or we're going to be providing to our audience. So I apologize, I'm jumbling it a little bit. In our show notes, you will see a link to get some help from Quinn. But please visit thevaluegal.com. Also follow her on Instagram as well. Links to both of those in the show notes. You guys, you need to get a CPA and a money manager. Reach out to Quinn. If she can't help you, she'll know people that can. On behalf of our audience, we thank Quinn for coming on our show today and helping our audience stay in business and manage their money more effectively. Guys, you work so hard for it. Let's keep as much of it as possible. So on behalf of the audience, thank you, Quinn, for coming on and spending an hour with us. And on behalf of Quinn and myself, thank you to our lovely, beautiful audience. We had almost 50 people watching at one point during the stream here. We'll have tens of thousands more will listen once this episode drops. We love all of you and are so grateful to all of you. So we thank you for supporting our show. And the best way that you can help us grow is by telling another realtor or anyone that owns a business or anyone that is struggling managing their money about Quinn, and also any other realtor that wants to learn how to manage their money. Tell them about Keeping It Real. Send them over to our website, Keeping It Real Podcast. What's our website? KeepingItRealPod.com is a place you can go, or you can just pull up any podcast app, search for Keeping It Real, hit that subscribe and like button, and let us know what you think of the show. Give us a review. We appreciate it. And we read all of your comments and reviews. So Quinn, thank you so much. Oh, and by the way, I'm sorry. One last thing I want to announce. After 5 years of being on the show, and I should have done this many years before, but I'm finally doing it now. We have this short form video clips that we post every single weekday on Facebook, Instagram, TikTok, LinkedIn, Twitter, YouTube. We post these short form 60-second clips from episodes like this one, and we post them every day so you can get a bite-sized nugget of information that'll help you run your business. So check us out on social media. Our link tree, which has all of our social all of our social channels will be in the show notes as well. So click on that and follow us on this social network of your choosing. All right, Quinn, thank you so much for being on the show. We appreciate you, and we look forward to seeing everybody on the next episode. Thanks, Quinn.
Thank you.